All right, welcome to Predicting Judicial Decision Making with Machine Learning. This is a webinar that I'm hosting. My name is Benjamin Alarie. I am the co-founder and CEO of Blue Jay Legal. I'm also the Osler Chair in Business Law at the University of Toronto. And the goal of today's webinar is to give you some background about what Tax Foresight is all about, give you a taste of how we are going to start seeing more and more tax accountants, tax lawyers, and other folks in government and academia using machine learning to predict judicial decision making. And really, this is part of a natural evolution of how legal research is changing over time. And so it's really my pleasure to give you some background, some context, and then to jump in right into an exercise so you can see what this means for the future of tax research. All right, so here we go. I think there's a way of thinking about and contextualizing the way in which tax research has changed over time. When I started law school back in the 1990s, there was a huge focus on being able to use physical resources, so paper-based resources, books from the library, legislation. It was all in paper, right? Lots of law reviews dominated the law library, lots of loose leaf publications, those binder-based things that people had to drop in updates and remove pages and add pages, and it was very laborious. But it worked. The system worked. So you could find materials, hunt them down, and you kind of went on a paper chase through the library, jumping from stack to stack. And if you were successful in that paper chase, what you ended up with was a big stack of physical things to read. And so you'd sit down in one of the comfy chairs and pour through those materials and follow the references from one source to another source and really track down what you're doing. And it took a lot of time, but it's also very, very effective in getting to the right sort of answer. And so that was a world that dominated probably throughout the 20th century up until the end of the 1990s into the start of the 2000s. And then we saw the emergence of the next revolution, which was the kind of the digitization of a lot of those materials. Almost all those materials have now, of course, been digitized, and they're made available in different ways. Some of you will be familiar with different DVDs that you can use that have collections of materials on them that you can use for tax research. Others are more familiar with cloud-based systems. So a good example would be TaxNet Pro or Westlaw or LexisNexis, or some of these other cloud-based systems that you use to conduct legal research and tax research. And of course, TaxFind is available in multiple formats digitally, and increasingly there are mobile applications as well. Using these digital technologies, so far the practice has mostly been to treat those digital resources as a more quickly accessible version of the physical materials that predominated throughout the 20th century. So, we've been relatively less imaginative about how we're using these digitized materials. We went from physical libraries to digital libraries, and so now what we do is we tend to jump into one of these digital repositories and assemble a digital stack of things to read. And, we will follow hyperlinks around. We do keyword searches. We can find things faster in the second stage of evolution of these tax research tools. But still, at the end of the day, we're sitting down and we're spending a lot of time processing, using our brains, this information. We're working through these materials. Lots of people who are kind of old school like me still prefer to print out paper-based versions of those materials just because we prefer working with paper. If we're going to sit down and spend several hours working through some detailed analyses, we want to have the paper-based stuff in front of us to really work with. I think it's fair to say virtually every professional services firm, government, has moved largely into the digital research space now. The law libraries, the tax libraries that firms used to host are now much smaller than they used to be, and there's an increasing reliance on digital formats, which makes a lot of sense. The next stage that we're going to see is really where Tax Foresight fits in and other machine learning technologies are going to fit in, and that's a computational stage. So what this what this really means for you is that instead of producing a digital stack of things for you to read, what you will do is identify the legal issue and then work through some kind of system, some kind of online system that will be much more dynamic, that will operationalize a lot of the materials that have been digitized and basically give you the tools to really leverage all of those digital assets without having to sit down and read through necessarily as a first step all of those digital materials. So of course you'll want to drill down into those digital libraries, but the computational change here is going to mean that what you're going to do is you're going to start with computational methods and drill down into the digital libraries for support or to look into things a little bit deeper if necessary in a particular case. So you can get a really great sense of the landscape surrounding a particular legal issue using these computational methods. And the point of this webinar is to really introduce you to what this computational revolution is going to mean for your research. It doesn't mean that we're going to jettison digital. Of course, you're still going to use these digital resources to do further refinement of your research and explore a little bit more deeply, but you'll be able to use them in a much more kind of targeted way. So you're going to be able to target those things that are precisely the things that you should be looking at. And so we're going to explore that in our exercise in just a few minutes and get into it and show you how that actually works in a real case. And so now in 2017, this would represent kind of a stylized view of how a tax opinion gets created. And you would start at the top here, getting the facts from the client. And this is based on your instincts as a tax professional. You know what matters, what doesn't matter. You can identify the legal issue, and then you need to find the relevant material digitally, read those materials, adopt a preliminary view, and then set to work drafting it. You run that past other experts. They will provide you with feedback with which you go back and improve the opinion. Improving the opinion may mean that you need to revisit the client and ask some more clarifying questions, get some additional information, and then it kind of kicks off and it repeats, right? So it repeats until you're pretty comfortable with the opinion, you feel good about it, you think it's complete, you think it's defensible. Where the computational methods are going to be very, very helpful is on this side of this flowchart. So as you'll see, Tax Foresight directs you to the most important aspects of a case. It asks you to elicit particular information from the client, and it automatically looks at the material. So it's preloaded, it's been trained on all the relevant material. You can read, it essentially reads those materials for you, proposes a view, and offers an explanation about that view. So it really will accelerate this half of the tax research trail. It leads you to then reflect on the predicted view that you're getting out of the system. Of course, you should run it past yourself, run it past other professionals, and then test other facts. So play with the facts, maybe ask the client for more clarification, figure out what's driving the client's situation, and it really accelerates the tax opinion process here. Really allows you to leverage those materials. Maybe you want to drill down more into those materials. We'll explore exactly, again, how this works in a moment. Okay, so let's jump into the judicial approach versus Tax Foresight. So this is just about providing some additional context into what we're doing. As you know, judges, when they hear a case, especially a trial, will hear from various witnesses, look at the various documents produced by the parties, and will weigh the different evidence and come up with a narrative about what actually happened in a particular case. So they're deciding on the facts, and they're the trier of fact, and basically they're deciding on what actually happened. Judges then are meant to apply legal reasoning to those facts, and the legal reasoning, if successful, will lead the judges to a particular legal outcome, lead them to a judgment. So much of law school and legal training focuses on this legal reasoning piece. So we kind of assume that the fact-finding exercise is as it is, and judges will find the facts. And we kind of take given when we apply legal reasoning, and then we focus on, so how do we actually get from the facts of a dispute to the right outcome? And that's what law school is all about. That's what so much of legal reasoning is about. It's about how do we map from facts onto outcomes. And we really, really trust judges to find the facts consistently and reliably. So the whole point of our legal system is to have the parties present evidence to lead the judges to come to a reliable determination of what actually happened, then apply legal reasoning using their expert judgment to reach that judgment, reach that outcome. As an input in tax foresight, we take the facts of a case, much like judges would take facts. We take facts from the user, and then we predict the outcome of those facts. And so as an input, as we train the system, as we train these algorithms, what we're doing is we're really focusing on the facts of cases as judges have determined them and the ultimate legal outcome decided by the court. We're kind of treating as a black box this legal reasoning process, and instead training our algorithms to replicate how judges map from facts onto outcomes. So this allows us to sidestep some of the messiness associated with trying to recreate exactly how judges would think about mapping from facts onto outcomes. We just want to replicate the results of that legal reasoning process. We're less concerned with replicating precisely how that goes in the judge's mind. So this will make more sense, I think, as we proceed, and I'm happy to answer questions about that in the Q&A at the end. But let's just jump right into the exercise now. Okay, so let's use the gross negligence classifier on Tax Foresight, and let's use it with a real situation. So here's the situation. We have a taxpayer named Mel who has been assessed gross negligence penalties by the CRA. There was a problem with Mel's 2016 tax return. His accountant, Alan, has been representing Mel, helping Mel file his tax returns for the last 10 years. And Mel's accountant accidentally misplaced one of the documents associated, one or more of the documents associated with his dividend payment, and it just didn't make an appearance on his return. So the tax return as filed reflected income of $150,000, but Alan didn't include the $60,000 of dividends received from his holding company on the tax return. So the CRA obviously noticed the discrepancy between the company's tax return and the company's filing, so here probably a T5, and Mel's own tax return. And so, Mel has been reassessed and is facing gross negligence penalties. Alan is a CPA. Alan's been servicing Mel for the last 10 years. Mel has never had a problem before with Alan's services, never had any kind of problems with the CRA. And Alan recognizes that it was his fault. So it was just, this record was placed in the wrong folder. It was inadvertently excluded from Mel's tax return. So the question that we'll look at is, is Mel likely to have to face these gross negligence penalties? Are these penalties something that the Crown can actually insist upon if this were to go to court? Would a judge actually find that Mel was grossly negligent and have to face these pretty significant penalties under subsection 163(2) of the Income Tax Act? So let's jump right into Tax Foresight and see what Tax Foresight tells us about the probability of this. So I'm going to log in here to Tax Foresight. This is what our subscribers to Tax Foresight see when they log in. Jump right in here. Okay, so we see the classifiers, we see the case finders. I'm going to focus right now on what we need to do, which is to look at the gross negligence classifier. We have all kinds of other classifiers, though. We have income versus capital classifiers, ones that distinguish various sources of income, ones that deal with different kinds of inclusions, deductions, and a number of jurisdictional classifiers that relate to taxpayers with cross-border tax issues. I'm just going to focus on the gross negligence classifier because that's the one that you would need to look at to answer this question on Mel's behalf. All right, so I've clicked on the gross negligence classifier. Here I am in the system. This is explaining that this classifier addresses issues under subsection 163(2) of the Income Tax Act. I'm just going to click through here, and what you see is a number of questions pop out, right? So this is essentially collecting the facts of the situation from us around Mel's situation, and the view is to give us, the goal is to give us a prediction about how this case would actually go if it were to go to court. What would a judge actually say in Mel's circumstances? So see, we're going to answer some questions about Mel as a taxpayer, some questions about Alan as the tax preparer, some questions about the tax return and what it is that was falsely reported or mistakenly omitted, some questions about the inquiries that the taxpayer went through before filing or after filing, before the CRA approached Mel here, and then some questions about the records, and then we'll get the result. Okay, so how many academic years of full-time formal education has the taxpayer completed? So here we can hover over the tooltip and we see the question asks for the total years of formal education that the taxpayer has completed beginning with grade 1. Okay, so I'm going to assume here, and this is where you would ask the client, I'm going to assume here though that Mel has grades 1 through 12 and then maybe a 4-year degree. So I'm going to say 16 years of education. I'm going to assume that Mel is fluent in English or French or both. Mel is running a retail business in Winnipeg, so I'm going to say yes, the taxpayer has some work experience involving responsibility for the finances of a business. It's his business. He has worked in a supervisory or managerial capacity. He has been a member of a corporate board of directors. He has owned, operated, or controlled a business. There's no mention in the scenario that he was suffering from any kind of medically diagnosed condition that negatively affected his cognitive abilities. So I'm just going to go ahead and say no there. Did Mel prepare his own tax return in the majority of the 5 years prior to the year of the tax return in question? No. Did someone other than the taxpayer complete the tax return or amendment containing the false statement or omission in question? Yes, it was prepared by Alan. Does the tax preparer have a relevant professional qualification such as an accounting designation? Yes, he's a CPA. For how many years has the taxpayer used Alan's services? 10. Has the taxpayer had a denial of a claim or an inclusion of income by the CRA in a prior taxation year for a return prepared by the same tax preparer? No, he's never had an issue before. Did the tax preparer make any requests to the taxpayer with respect to the process of completing and signing the tax return that were unusual or deviated from past practice? No, there's no mention of that. Did the tax preparer complete the portion of the tax return indicating that the tax return was completed by a tax preparer? Yes. Was the tax preparer compensated on a contingency fee basis? No. Was the tax return or amendment in question altered by the tax preparer after final review by the taxpayer? No, there's no evidence of that in the scenario. We can ask about it, of course, of Mel, but there's no evidence of it. Please describe the type and source of the false statement or omission in question. So I'm going to say omitted dividend income here. What is the dollar amount of the false statement or omission in question? I'm going to say $60,000. There's some debate here whether you gross this up for the dividend gross up. I'm just going to include the raw cash amount here, $60,000. We can come back and change it later and see if it has much of an influence on the overall result. If the taxpayer filed a return, what's the taxable income declared by the taxpayer on the tax return in question? $150,000. Is the false statement or omission in question a type of income loss deduction or tax credit that is new to this year's tax return? No. Mel receives dividends routinely from other sources as well as from his holding company, so this wasn't a brand new thing. Did the taxable income declared on the tax return in question deviate significantly from past years? No. Were there significant changes to the taxpayer's tax return compared with the previous taxation year apart from the false statement or omission in question? No, not really. It's pretty consistent. Did the tax return contain other correct items of income losses, deductions, or tax credits of the same type as the false statement or omission in question? Here the answer is yes. He had some other dividends, nothing as significant as the $60,000 from his holding company, but yes, he had other dividends. Okay, now we get to inquiries. Did the taxpayer express concern about the false statement or omission in question? No. We saw in this description of the scenario earlier that Mel has just adopted the practice of signing these tax returns prepared by Alan without actually scrutinizing them very carefully. So no, he didn't ask Alan any additional questions about those aspects, didn't seek a second opinion, and didn't contact the CRA about the return before filing it, or even before the CRA indicated there were some concerns about the return. So no, 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 no on inquiries. Get to records. Does the tax return accurately reflect all the records received by the taxpayer over the course of the year? No, because he would have received a T5. His bank records would have reflected the receipt of this dividend. So the answer here is no. Did the books or records provided to the tax preparer match what was claimed on the taxpayer's tax return? No. It was kind of Alan's mistake, right? So Mel provided all of the records to Alan, asked Alan to prepare the return, and Alan mistakenly misplaced some of the documents. And so it was kind of the tax preparer's mistake here. Okay, that's the end of the questions. We've collected enough of the facts here for Tax Foresight to be able to situate this case among all the cases that have previously been decided on these gross negligence penalties by the courts in the past. So when I click compute, we're going to get a prediction about what the court would say here and how likely that is in Tax Foresight's opinion. It'll explain the result, identify similar cases, and I'll show you the report that the system generates. Just for your own, just as an exercise in your own mind, or even not in your mind, I'd invite you to write it down. Write down how likely you think it is that gross negligence penalties would apply given this situation. No need to feel self-conscious about this. Nobody's going to know, but just decide on the percentage that you think the likelihood would be that a court would say, yes, in fact, Mel should have to pay gross negligence penalties in this case. So I'm going to give you a second to think about that. 5, 4, 3, 2, 1. All right, let's compute this. All right, so in Tax Foresight's opinion, it's about 74% likely that a court would find Mel here to be grossly negligent and have to pay these gross negligence penalties equal to about 50% of the tax that was not reported, that was omitted here. Okay, so you see the result, you see the confidence. Tax Foresight generates this explanation about why that is the answer. So if you're thinking back to that flow chart about how a tax opinion gets done, you'll see this is kind of helping you form a preliminary view about how likely these gross negligence penalties are going to apply. You get a head start on an explanation or thinking about an explanation, how you might draft up an explanation. This explanation is customized and produced in a way that's very sensitive to how we've answered these factual questions as we've gone through the questionnaire. And it's sensitive to the overall result. So this is a tailor-made explanation about why that's the outcome. You'll see that Tax Foresight has identified a number of similar cases here, similar to the scenario that we presented the system with. This orange bar indicates just how similar the facts are in these other cases. Now, if I'm representing Mel and Alan, I'm going to want to make the case that gross negligence penalties should not apply. And I'm going to pay particular attention to this down case, because in that case it's pretty similar and the court said not grossly negligent, and also this Knudsen case for the same reason, it's not grossly negligent. These other ones are interesting, but there the courts all said grossly negligent, so it's not going to be as helpful to me. I'm really going to be scrutinizing Down and Knudsen for aspects of the case that might lead a court to find in favor of Mel. How can we get Mel out of these gross negligence penalties? How can we scrutinize these particular cases to find ways to align our case with what happened in Down or Knudsen and say, well, you know, this case is a lot like Down, or this case is a lot like Knudsen, where the court held that the taxpayer should not be found to be grossly negligent. You'll see that Tax Foresight reports on the leading authorities. So if you've done much practicing with these case laws, this case law around gross negligence penalties, you'll be familiar with these names. These are the cases that the courts always refer to, lawyers refer to, and accountants refer to in really exploring whether or not gross negligence penalties should apply. Here we have a number of different things that we can do. I can email myself the report or a senior member of the team and say, here it is. When I send this email, they'll get a copy of the report outlining all of the answers to all the questions, the prediction, the explanation, and let's see what that report looks like. I'm going to download it. The system's busy generating that report now, and it's going to start downloading. It's downloaded. Okay, so this is what you get as kind of the deliverable. This is what you'd be sharing with either with yourself or somebody else if you use the share feature. So you get a unique ID, you get the classifier, the results of the classification, a sense of how confident the system is, the explanation of the result here. These links are hyperlinked. You get a list of the similar cases. So you'll see Down is here, Knudsen is here, the leading authorities, and then also, really importantly, for conducting your practice, you get all of these questions and answers. So these are all the questions that you were confronted with in filling out the questionnaire and the responses to those questions. So if you need to preserve this, if you want to add it to a client's folder, it's a great thing that you can just file away and save. We asked for feedback. I'm going to gratuitously give some really great feedback here. Outstanding. Send this to the Tax Foresight team. They're going to be thrilled about this, and they'll be happy to get this feedback. But I think it's accurate. Okay, so now different things we can do here. I'm going to go back. I'm going to explore your professional intuitions about some of these things. So I'm going to go back. I'm going to say, okay, on question 1.4, what if there was some evidence that Mel had suffered a concussion, a serious concussion around the time that this tax return was completed? So what if we say yes? What's your intuition about how this would affect the likelihood of those gross negligence penalties being applied? My intuition is that it should make it less likely that those gross negligence penalties would be applied by the court. The real trick here is, I think everyone would agree on that directionality, the real trick is figuring out how likely is it to reduce the probability of those penalties applying. I'm going to recompute. I'm going to say, well, I don't know. Again, ask yourself, what do you think in your own mind? I think it'll significantly change. Let's see just how much. Okay, wow. So it's dramatically reduced the probability that gross negligence penalties would apply here, and 91% is the result that we're getting from Tax Foresight. And so the explanation would change, everything would change here. We've got some reduced matching in terms of the outcomes here. These cases they look like mostly the same cases. Seems like there aren't very many cases where all the same pattern has emerged with cognitive impairment there. So that's something, but it dramatically changed the results. So that's interesting. What if we change something else here, just to explore this? What if there was a contingency fee involved here? What's your intuition? Well, I think we can agree on the direction. If there's a contingency fee, it seems more likely that the tax preparer is going to be motivated to secure a particular result, right? Which should mean that the taxpayer should be a little bit more careful about scrutinizing that return. And it's going to mean that likely judges are going to be a little bit more skeptical about claims that something was just an honest mistake, and that the taxpayer was duly diligent. So I'm going to think that the gross negligence penalty should increase in likelihood here, since we changed this one. I changed the first question back, of course, 1.4 about the medical condition. I've changed this to a contingency fee basis. The real question is how much? Does it change it? Not at all, a little bit, or a lot? Well, let's see what happens. Okay, so it changes it a lot. This is a massive change. If there is a contingency fee involved in these circumstances, we change this one thing, it looks almost certain that gross negligence penalties would apply. So that's really great to know. And it's the strength of the system. You can go back and change other things. So let's go back. Let's change this back. And remember, the baseline is 74% likely to be grossly negligent. And let's change this one, which is the amount of the dividend. Let's pretend we're going to gross it up, and let's say the gross up amount is to $90,000. Let's recompute. Now, this should make it slightly more likely to be grossly negligent, and that's actually what Tax Foresight says here. So 76%. That's not a surprise. What it means is, whether you gross it up or you don't gross it up, it doesn't make a massive difference, right? It's on the margin. It's a little bit different, but it's not a massive amount. And then you can test just how sensitive the result is by trying out different numbers here. So what if it were just $30,000? Yeah, so you get a sense of how sensitive the system is to, or the predictions are to these different amounts. It doesn't seem like much is going to turn on the amount of the false statement or omission in question. It turns on other background factors. And it's really cool to be able to know precisely how much it matters. Okay, so that's how the gross negligence classifier works. I'm going to show you now the case finder functionality. So I'm going to jump in here to the gross negligence case finder. I'm going to zoom out so we can see the match cases over here and the different factors that we can filter all of the gross negligence case law on the left-hand side here. So I'm going to want to find the cases by outcome. Remember, when I was looking at those similar cases that the classifier reported on at the end, I said, oh, I'm really focusing on those ones that were found not to be grossly negligent. I'm going to continue that here. I want to find cases like Down, like Knudsen, that the taxpayer was found not to be grossly negligent, and try to find what's driving the court in those cases to say that the taxpayer was not grossly negligent. Now, the cool thing is I can filter through by things that are specific to my client's case here. So if I'm advising Mel, I'm going to want to find the cases where the taxpayer is very sophisticated. So you'll see in real time, it's changing the cases that are coming up. So now I've said, okay, I'm looking for cases where the result is not grossly negligent, the taxpayer is fluent in either English or French or both, and the taxpayer is very sophisticated. So there are 5 of those cases in the case law. And if I hover over the result here, I can see what it's matched on. It's matched on the outcome, the taxpayer's fluency in English or French, and the taxpayer's business acumen. And you'll see most of these cases are not grossly negligent. You'll see Melman has come up here, grossly negligent, and it's not matched on the outcome. It's matched on the taxpayers being fluent in English or French and the taxpayer's business acumen. But I don't want to look at grossly negligent cases. So what I'm going to do is dial up the importance of the outcome here. And this should recalculate and basically mean that it's prioritizing the ones that are not grossly negligent. Okay, I can continue on here. Say the taxpayer does not suffer from that kind of medical condition. Find cases where the taxpayer had a tax preparer complete the return or amendment. Okay, so far so good. We still have the same 5 there at the top. Find cases by the tax preparer's qualifications. Okay, yes, relevant qualifications. No prior history with the CRA with this tax preparer. No deviation from past practice. No contingency fee. No alteration of the tax return after final review. Okay, I'm still left with the same 5 cases. This is great. Okay, now let's find ones where the amount of tax at issue or the dollar amount of the false statement or omission is kind of in the same neighborhood. So let's say $40,000 to $100,000. Okay. All right. Now let's see. There was no significant deviation from the previous year's return. Okay, so this is awesome. So now I've got 3 cases that are very, very similar to the facts of my case. They're matching on all those different things, and the court said not grossly negligent. Now I'm going to scrutinize those cases, and I'm going to hop in here and click on those. This will take me right out to TaxNet Pro, and I can do my further research here in TaxNet Pro. I've got SIL Inspection Limited. And I can go ahead and explore this. What was it about this case that caused Justice Little here to find that the taxpayer was not grossly negligent? It's going to be helpful, and I would, of course, carry on with the other ones as well. One thing while I'm in here, you may notice this new Tax Foresight link at the top of TaxNet Pro. this allows you to bounce back from TaxNet Pro into Tax Foresight. And so we have the links going back both ways between Tax Foresight and TaxNet Pro for your convenience. Okay, so this is obviously very powerful. The case finder, you can drill down and find exactly those cases that you need to look at to advocate most strongly for your client. So I've been going on here. I'm going to now take some questions. I'm going to bounce back into my presentation here. All right, so I've got lots of questions. I don't think I can get to all of the questions here. It looks like I have about a dozen questions. The first one out of the gate is there a classifier for GST, HST2? And here the answer is, yep, a number of the classifiers relate to GST, HST already. So for example, the carrying on business classifier will answer the question of whether a taxpayer is carrying on business for GST, HST purposes as well as for income tax purposes, and there are more GST, HST classifiers on the way. You can imagine that a single supply versus multiple supply GST, HST classifier would be very useful, so we're working on that. There will be gross negligence classifiers for GST, HST, director's liability classifier for GST, HST. The question of whether something's an exempt financial service is a big GST, HST question that we're going to be building functionality for. So there are lots of GST, HST classifiers, and they're on our roadmap. So absolutely on the way. Stay tuned. Already we have some of the functionality for GST, HST, and it's only going to build from here. Which other classifiers are currently in development? So there are many that are in development. So as I mentioned, director's liability for GST, HST, also director's liability for income tax. A subsection 152.4 classifier is being built, and so that relates to whether or not the CRA, the government, can look back beyond the normal reassessment period. And so there's a ton of case law on those questions, and that's in development. We have the capital cost allowance classifier that's in development that should launch in August. And the CCA classifier will help you place different depreciable properties into the right CCA class through a really slick interface where it asks you a series of questions, yes, no, yes, no, yes, no questions, and will basically get you down to the right candidate class for a particular piece of property. So that's pretty exciting. That's in development, and lots more. So we have a team of 20 folks here at Blue Jay Legal that are working on product development. We're working flat out on building new functionality for the system. Is the PDF printout hyperlinked to the cases in TaxNet Pro? I think you saw in the system that, as I went through the demo, that the cases in the explanation are hyperlinked to TaxNet Pro. So yes, absolutely. The other similar cases and the leading cases are not at the moment hyperlinked, but that's an easy change, and so we're going to take that on board as a suggestion to add in. So thanks for the question, and we will link those in the report through to TaxNet Pro just to make your lives a little bit easier. Who or what is Blue Jay Legal's intended market? That's a really great question. The way we think about it is there are really 4 distinct markets. So lawyers, accountants, academics, and then government. So among lawyers, the uses of this are obvious both on the planning side and then also on the tax disputes, tax litigation side. For accountants, much of the same use cases would apply, although there are additional uses, right? So as you're preparing financial statements and doing the regular accounting or audit, you might be interested in questions around income versus capital. Is this currently deductible, or do I have to capitalize it? Questions like that come up all the time. So it's not necessarily about tax planning, it's just about tax compliance. So that happens as well for accountants, and that would be less relevant naturally for lawyers. But accountants have a lot of the same use cases as well as lawyers would have. with respect to tax planning, and then also dispute resolution, depending on the context. Academics who are interested in how the law actually works in a lot of these different areas are learning a lot. So as I wear my law professor hat, I am extremely interested in what we can learn from using machine learning to grapple with what the courts are actually doing, what are judges actually doing in these different characterization questions. And so academics and policymakers should be really interested, and are really interested, in what tax foresight and machine learning can teach us about the law and how it's actually being implemented and applied by the courts. There's no better way to gain insight into that, because you can play with the facts and see what the results are. Okay. I think I'm going to wrap it up there. There are a bunch of other questions. I would invite you to follow up with me. My email address is ben@bluejaylegal.com. If you have further questions, I'm happy to answer them by email. So that's ben@bluejlegal.com. Ben@bluejaylegal.com. If you want to send me an email, I'm happy to respond to your questions by email. If you're interested in getting a complimentary walkthrough of tax foresight with the Blue Jay Legal lawyer, it might be me, it might be another member of our legal team to step you through the software and to give you a sense of the other functionality. Please send a text to 416-564-4696, and we'll get right back to you, and we can set something up. What we found is that a lot of professionals really enjoy getting a one-on-one walkthrough with the software, where you can actually try out different cases, maybe scenarios that your clients are currently facing. There's no better way to get a lot of insight into how the law applies than to actually sit down, and it gives you a really great sense of what tax foresight's all about. And it's our pleasure to do it and to provide you with that opportunity, because it's a really great way for you to learn about the software, and we learn more about your practice and how you can use tax foresight. So it's really been my pleasure to be your host on this webinar today. Again, my name is Benjamin Alarie. I'm a co-founder and CEO of Blue Jay Legal, and I really encourage you to send a text, 416-564-4696. Nothing fancy, just say, hey, I'm interested in tax foresight, and we'll get back to you and we'll line something up. And thanks very much. Have a great day, and take care.